Thank you for tuning in for today. Give me just a second. Right. Thank you very much for tuning in today and spending your precious Sunday morning with us. So before we start, let me just check who hasn't had your breakfast, type 1, and those who have already a good start to the morning, type 2. Awesome. Okay. I believe most of us just woke up not long, haven't had our breakfast, but all good. We will try to make this session as interesting as possible so that it replaces the energy required from your breakfast. All right. So let me introduce myself. My name is Elkstan. I'm the Deputy Branch Controller of Profere Property SS15. All right. So coming to today's topic, what our speaker will be sharing is what makes a property worth investing, right? So as you can see here, we have a young and vibrant as well as energetic group of real estate negotiator ready at all time to serve you better. Okay, so in Profere Property, we believe we are changing the way the real estate transact. Before we begin, let me just go through a bit of today's agenda with you. So we will start with a bit of introduction about our company, who we are, some success story that we have, before we move on to our speaker. And right after our speaker, there will be breakout room for us to know you more, right? So that we can serve you even better. So without further ado, let me first introduce ourselves. So Profere Property, we are based in Klang Valley area. And our agency, we include both real estate property agency as well as property management firm. And we provide a range of comprehensive professional services that covers all types of property, right? We aim to ensure that the portfolio of our property, our clients' property investment are being well managed, hassle-free. So this is a list of some of the services that we actually provide, which include property consultant, property transaction, property portfolio, and so on. Allow me to share with you some success story of Profere so far, right? So this is a unit in my place that one of our investor brought through us. This is before the this photo was taken on the day of the viewing, so it's a okay unit in good condition, I would say. But if in order for you to invest and rent it out, we suggested to the investor that they should invest in some renovation to be done so that it can push up their rental yield. And thankfully, the investor did accepted our suggestion. And by spending less than 5,000, you can see here, we created for him a very modern design, adding 2 more rooms. And this ultimately enabled more tenants to come in and they are more interested to actually take up the rooms available here. So this whole transaction, what the investor actually earned is that, first thing first, the property was bought 100,000 below the market value. At that time, it was 500,000, and the investor actually bought the property at 400,000. And another amazing thing is he only came up with 8,000 ringgit as upfront cost. Apart from that, the rental yield, by investing 5,000, he was able to improve the rental yield from 2% to 7.5%. What's more, maintenance fee is also below 300. It's a freehold property, and based on our experience and past transaction, in 5 years' time, we are expecting that the capital gain that this investor will attain is actually up to 50%. And if he's not planning to sell, in 25 years, he will fully be owning this property. If you want to know more, stay tuned during our breakout room so that we can explain to you more how we can help you to gain such good investment. All right? Okay, so this is actually the best time to buy residential property. Why? Based on this graph, this is a graph of Malaysia House Price Index by the Central Bank of Malaysia. As you can see here, for the past 20 over years, the last time the residential property price in Malaysia actually was in the negative zone was in 1998 and 1999, whereby there was a global financial crisis. And it was always on the positive until last year, third quarter, there was a slight drop and readjustment of property value because of the global pandemic. On top of this readjustment of property price, right now, the bank loan mortgage interest is also in an all-time low. Okay. So before we move further, and before I actually introduce the speaker for today, please be reminded that there will be a breakout session after this, whereby we wish to get to know you more, and at the same time, we wish to let you know how you can actually enjoy such investment as our investor had previously. All right? Okay, so coming to today's speaker, Mr. Terence Yeo. He is an accountant turned real estate guru, right? He has multiple accomplishments below his belt, which includes being a staff of a developer, being one of the youngest brand owner in Oriental real estate, overseeing more than 200 million real estate transactions. And he was the rising star of the year 2017, right? Without further ado, let's welcome Terence Yeo.
Hello, good morning, everyone. Thank you for joining our session today. I also see some familiar faces. My friend here, Jamie, actually attended this. Thank you so much, Jamie, and also our beloved guest here. All right, good morning to Eddie and also Lai. Okay, I hope that at the end of this session, we can bring you tremendous value, okay? Because property investment is not something new, but it's something very interesting, and there is a strategies and step-by-step to do it, okay? So today I'll be sharing this topic called what makes a property worth investing, okay? Why I want to share this is because a lot of our clients, okay, even before I'm a real estate negotiator, before I become a branch controller, before this, right, I do not know how to invest property. I thought buying property is just, okay, buy cheap and then get good rental, that's it. And then I'll make money, okay? That is typical what we thought. But throughout my own experience and also our client feedback, we noticed that actually property investment is actually more than that. So today I would like to share you some strategy, okay, and also some of the service and the products that our company actually developed since the first MCO. Okay, it's something game changer in my opinion. Okay, before I go to that, I would like to share with you guys some market updates, especially on the macro and economic perspective. Okay, now, okay, we all know that coronavirus happened last year, and in fact, we already gone through a few times of MCO lockdown, staying at home. Okay, I'm sure that a lot of you actually find this very challenging, not just financial challenge, okay, and also mental challenge as well. So I hope everyone bear with this, and we can see that the vaccine deployment rate is getting faster and faster. In fact, it's already surpassed the speed compared to the UK, okay? But this is what happened, all right? We can't do much as an individual, all right? And when this kind of pandemic, this kind of crisis happens, right, what the government tends to do is to print more money. And what this will lead to is will cause inflation. What does that mean? Meaning there are more money in the market, the currency, the value of the currency getting depreciated, less and less value. Okay, last time you buy, okay, just to give an example, 20 years ago when you buy a curry mee back in my time in primary school, it only costs what, 1 ringgit 50 cents to have one curry noodle. And now 20 years later, it's already cost more, what, 7 ringgit, 8 ringgit. So this is the depreciation when it comes to value, and why this happened over time and also inflation. And especially this kind of time, this kind of period, pandemic, governments tends to print more money to help the people. Got no choice, all right? And what happened is that since the first MCO, we can see that the interest rate actually going lower and lower. Good news for property investors or property owner. I'm sure that you realize your monthly installment actually getting lower and lower, all right? Because of the reduce in OPR. What is OPR? Overnight policy rate. Okay, basically this is the interest rate, lending interest rate from the central bank between banks to bank. So when this reduce, our interest rate reduce, our mortgage loan reduce. But what is the bad thing, or not so the cons lah? Basically, for traditional money save people that save a lot of money, okay, that they put it in an FD or put it in the bank as a saving in the saving account, what they will realize is that money return that they're getting are actually lesser because it's a two-way sword lah. So interest rates are falling, okay, tourism is affected. We know that borders is closed, so tourists cannot come in, and then that affect our economy badly, to be honest. Okay, this is what happening. Okay, but based on what we are seeing right now, the vaccine are getting better, the deployments rate are coming in very fast, and we expect, this is just my expectation, okay, the expect regular travel will be in 2023, okay, it will take some time, but no worries, because every crisis, right, there's always an opportunity one, all right? And then what happened is that currently in Malaysia, political instability, okay, we all know we are in Darurat, and who will be the person, the parties that will be in power after that, we do not know, okay, and that actually affect confidence of the people, okay. However, like I said, every crisis, every pandemic is something not very doesn't happens very often, but every crisis, definitely there's opportunity we can look into. One of the venue definitely is real estate. Of course, there's other venue as well, right? Okay, for this kind of time, what's the favorite for traditional investors is gold. Golds and bond are the safe haven for them, okay? If you notice, people are actually getting out the money from the bank, all right? Whether from the FD or from their saving, they buy golds, or they buy bond, because for the older people, the elderly people, they feel like this is a safer investment, okay? Whereas the younger people, where they invest, they don't buy gold, they don't buy bonds, they go to the digital currency. This is the hype, the trend now, all right? Cryptocurrency, Bitcoin, okay? And the rest are, there's a few Dogecoin, and there's so many digital coin in the market, all right? So these are the younger people, because why they do that? Because they see opportunity. There's the gain is tremendous, but of course at the same time the risk is also very, very high, okay? Basically they lose faith in the paper money, okay? And we can see that this will still continue on, all right? This will still, people still believe in it. But to me, in my perspective, I think if you want to invest into more safer instrument, actually there are other alternative. And one of the alternative is real estate. Why? Because real estate is tangible. It's something that can see, you can touch, you can feel, all right? And real estate is something that is there, okay? It's there. So, and it appreciates for many, many reasons, okay? And currently, our topic is about real estate, right? So what is the property market right now? So currently the real estate market, to be honest, the price is going downwards. In fact, it started in 2017, 2018. Actually, 2017 is the peak point. And then the pricing is adjusting because of global economy, all right? So property adjusting. However, certain areas that is matured area, the price is actually very sustainable. And in fact, certain good area, good property actually appreciate, even though the rest of the areas are adjusting in terms of the pricing. So those people, actually two years ago, we have been talking about, hey, actually this is the best time to buy. Because why? Because economy not doing good before the pandemic. So those who actually miss the boat, right? Actually, this is the best time. Why? Because when when these pandemics happen, it's a global crisis. It doesn't happen every 10th or what. It's something maybe even our parents have not come across also. So, and in affected real estate market. However, later I will share why property will still rebounds back, okay? And in my opinion, okay, property was expect to rebound to come to a peak 2 to 3 years later by looking at how the vaccine deployment. I would say quite hopeful actually. This year to next year is a good time to buy. Okay, when the vaccinations comes to saturation, meaning most of the people has been vaccinated, property markets will definitely goes up back on. Okay, because people have more confidence. All right, let me show you some interesting fact in Malaysia real estate market, especially on residential. Okay, as you can see, this data is from ceicdata.com. Basically, they are a data center that collect a lot of data. Oh, so this is basically the Malaysia market. Okay, I'm not showing you a global markets or any other country. We show you Malaysia data. So we can see is that actually Malaysia property price been always going up. All right, since 1980, and you can see that there's small adjustment in 1998, whereby that is a financial crisis in Asia. Okay, however, after a small adjustment, it goes up. I believe this will be the same in this year. Okay, there is a price adjustment for sure, but property price go up. Later, I will share you why is it so. Okay, now I want to share you some of the articles that is shared by a few different sources. Okay, this is the latest articles in 2021. It's not last year, it's this year's news. Okay, as you can see, New Straits Times actually mentioned that Malaysia property market endure challenging 2021, recovery start in 2022. Okay, and in actually this is 4th of June from Star Property outlook looks to improve in second half of 2021. Okay, and you can see that this is more relevant from H property, more relevant to developer side. Property sectors could see 38 year-to-year increase in 2021's earning from low base. Okay, and then last but not least, this is actually 2 weeks ago. This newspaper actually from 2 weeks ago is from Bernama. Property price likely to rise 3 to 12% in 2022 to 2023. So actually there's a lot of confidence in the market. All right, so I'm going to share with you also why property appreciate in macro perspective over so many decades. Why property appreciate? Mainly two factors, all right, in macro perspective. Okay, there are many reasons why property will appreciate. Okay, why certain areas appreciate better. Later, I'll go to that more in detail, all right? However, I'd like to share with you on macro perspective, two main things: fiscal inflation. Okay, just now I mentioned inflation already. Government printing money, keep on printing money, and value of the currency depreciate. So as we can see, I got this data from tradingeconomics.com, right? So from the Department of Statistics Malaysia, as you can see that when we talk about pricing increase, right? Meaning last time I mentioned, like last time 20 years ago, one bowl of curry noodle is 1 ringgit, 150 cents. And now it's around 6 ringgit, 7 ringgit. So basically this is reflected in Malaysia Consumer Price Index over here. As you can see, price, the value of goods actually increase over time. Okay, this is unavoidable, meaning materials, all the goods, all the materials increase over time. Another factors to consider is growing of population. All right, population in Malaysia is growing. Okay, as you can see, back before 1970, we have only slightly more than maybe 7 million. And now, how many millions population we have in Malaysia right now? How many, maybe I ask the questions to the floor. How many millions of population in Malaysia? Can anyone answer? Yeah, let's have a more interactive session. Who knows how many millions? 30 plus, 33. Okay, very close, Eddie, 30 plus, yes. In fact, it's 32 point something, close to 33. Okay, close to 33. Not hitting 33 yet, but close to 33 already. So you can see that populations are growing, okay? And hence why it creates demand for people to buy property for shelter, okay? And a lot of people, those that has money or they have ideas, they actually take this opportunity to buy property, invest, and rent it out to people. Okay, do we foresee more and more people are going to buy property or going to rent property rather than buying? Yes, but to me personally, yes, I would foresee that more and more people are going to rent property. Okay, why? Because Malaysia property price are going up and cannot run away one. People are more equipped with knowledge, more equipped with skill, and people with a little bit more money actually take this opportunity to buy property, to invest and rent to people, for those who cannot afford, right? So after my sharing just now, do you think it's a good time to buy property now? What's your opinion? If you think it's a good time to buy property now, can you press 1? If you think it is not a good time to buy property now, press 2. There's no right or wrong, right? So let's have a quick survey, like see on the ground, what is your opinion? All right, is it a good time to buy property now? You press 1. If it is not, you press 2. Okay, Eddie say it's a good time to buy property now. Okay, what's the rest opinion? Or maybe you don't know. Okay, Alps Chin said 1. Actually, it's a good time to buy now, because why I want to why I say that, because people will say, hey, maybe not because it's there's a lot of fear, there's a lot of no confidence in the market. But what I'm trying to say here is that during this point of time, we all know that it's a buyer's market, meaning buyers have a lot of options to purchase, and there's a lot of seller trying to sell the property. There's more seller in the market than buyer. And one good thing about this happens is that as a buyer, as an investor, all right, we get to get the best price, we get to get the best terms, all right, because there's so many owners here in the market, and if this owner doesn't agree, there's definitely a next buyer. And what we realize also, auction market, lelong market, okay, is very active recently. Hence why a lot of good deals coming out in the market. And if we are ready, if we know this, we have the knowledge, we have the skill, actually we can make money in the real estate market. Okay, all right. So if you think this is a good time to buy property, now I'm going to share with you some strategies that you can apply, okay, right now. So when it comes to investment, property investment, actually there's 2 things you have to consider, whether you are buying property to invest long-term or short-term, because the timeline actually affect what strategy you should implement. Okay, there's no right or wrong, but I would like to share my strategy to you. All right, so I will break it to long-term and short-term. First thing first, long-term investment. Basically, long-term investment, I will come to that later, but I would like to share investing in high rises and landed actually has a difference. A lot of people should think buying property, right? Whether it's landed or whether it's condominium, apartment, basically it's the same. But in fact, reality is that is a different. What's the difference? First thing, for condominium high rises, when it comes to rental yield, generally high rises condominiums, right? They can give you higher rental yield, meaning your monthly installment to the bank will highly likely able to cover by your rental yield with the right strategy. Keyword here, with the right strategy. Okay, and number 2, for high rises is that low capital gain. This is not so good when it comes to condominium. All right, there's a few factors that affected that. Meaning when it comes to capital gain, meaning long-term capital appreciation, property price appreciation is lower compared to landed properties. Why is it so? Okay, because for landed property, right, higher capital gain is because scarcity. One big reason is because scarcity. Land are getting lesser and lesser. That's why some people who are ready to purchase landed property, they actually can enjoy higher capital gain to compare. But there's also always a pros and cons. Okay, I come back to the high rises. Okay, for high rises, there is higher maintenance cost because every month you have to pay to the management office, the maintenance fund and the sinking fund. Okay, to compare to landed, you do not have to pay so much, even though you are a gated guarded area. And number 4 is low initial cost, meaning how much cost you have to come out to renovate the place. Okay, normally for condominium or apartment, their initial cost is lesser compared to landed property. And of course, if you go through sub-sale market, okay, if you go through sub-sale market, both landed and high rises, you still need to come up with money for renovation. Okay, now I come to landed property. Just now, it's basically a terbalik lah. All right, for landed property, right, people who buy landed property enjoy higher capital gain. Reason because of scarcity, just now I mentioned. Okay, because land are getting lesser. In fact, in Malaysia, there are plenty of land. In Hong Kong, there are also plenty of land. But why in property in Hong Kong, or even come back to Malaysia also, why property price go up? Because of scarcity. The land actually that has infrastructure, has amenity, actually is not that big. Yes, Malaysia still got a lot of land. You can talk about those jungle area, but still lack of infrastructure, lack of amenities. So that those areas that with this infrastructure and amenity actually is not a lot. Okay, so hence why, because of scarcity, landed property tend to enjoy high capital gain. However, when it comes to rental yield, right, landed property rental yield are lower, much lower, in fact. Okay, however, we have some strategy for you to increase the rental yield, even if it's landed property. And maintenance costs compared to high rises are lower, right? Some areas gated guarded, the security fee is not too much actually. But however, if you are buying landed property with proper facility, swimming pool and all stuff, maintenance can be quite high also. All right. High initial cost is because you need to spend higher expenses or renovation costs compared to condominium. Okay, that's quite normal one. So as I want to highlight here also, different buyer, different investors, right? Investment strategy will be different, depends on your capacity and appetite. Okay, last but not least is renovation required. Is required lah, basically for condominium or landed property. Renovation is required one. So, but no worries. Later on, we will help you to tackle that when it comes to renovation. Okay, if you need some advice, okay, you can ask us later, right? Now, okay, now what I want to share with you is this investment strategy. We call it a cash flow generator. Basically, whether you are buying landed or buying apartment, we would advise making sure that our rental is high enough to able to cover our monthly installment. That is the objective when it comes to property investment. And one way of doing that is to renting out by room. Okay, I just show you an example right here. So basically, you can see that this is apartments, normal apartments coming with three rooms, one original with 3 rooms. And what we advise here is that to partition one more room. Okay, and in fact, just to tell you, because we have been managing a lot of units for our clients, and those owners that actually rented out by room actually able to sustain you, especially during this tough time. And we can foresee that more and more people they cannot afford to rent the whole unit, ended up renting out rooms. So, and this is a good news for owners who actually rented out room, right? And because occupancy, they can see increase, and in fact has been very consistent. Okay, 80 to 100% occupancy during this pandemic time. If you are renting the whole unit out, chances are if your tenant left, you have 0 income, all right, during this time. So imagine some owner actually suffered. And because of cannot go for the viewing appointment, their unit left vacant. So in this strategy, right, you can see that by renting out room, the return of investment rental ROI is significant. You can see 5.5 to 6%. And this property price is about 300,000 to 400,000. If you're renting out the whole unit, we can only expect what, 1,500 to 1,800. But if you rent out by room, you can see that the rental is much higher already. And we call it a ROI booster lah. Okay, this is one of the method. Now, another way strategies for property investors here, if you are new, probably you're not aware, actually you can buy a lot of property in a very short time. Okay, we call it leverage lah. And this is through the multiply of property investment strategy. So like I said, when we do property investment, our objective is to make sure that we don't bleed too much for new investors. Okay, installment for 500,000 property, installment is only 2,500. And with our strategy, doing a room rental, okay, you can get 3,000 rental per month. So basically you generate a positive cash flow of 500. So this rental, right, can use it to calculate your debt servicing ratio, meaning to improve your profile of getting a next loan, okay? So by using this strategy, we can keep on buying property 6 months to 8 months time, because the whole transaction, right, through the whole purchase transaction, it will take 3 to 6 months. So once the transaction is completed, we can move on to the next one. And I'm sure that some of the investors here may be short of cash. You saying that buying property 3 to 4 properties and the cost cash should be significant lah. Okay. However, we have ways to reduce that. Okay, we have strategy to reduce that as well. So if you are earning 5,000 salary, it's possible that you can own 3 to 4 property worth 2 million over the 2 years time. All right. So this is one of the strategy. Normally, investors who come in that they do not, or maybe this is their first time buying property or they are new. So normally our advice is go to tackle apartments or condominium first. Why is it so? Because just now I mentioned already, high rises, right, able to generate a higher rental yield compared to landed. When condominiums or apartment, you buy enough portfolio, generate enough positive cash flow, right? Then we will advise you to start looking into landed property. Okay, this is normally the investment strategy we apply. Okay, however, if today you already have multiple property portfolio, the strategy will be different. We will advise you to look into landed or even comes to industrial. Okay, that is the advanced level lah. All right, now another short-term investment. Just now I mentioned about timeline, whether you're looking long-term or short-term. My favorite still long-term investment strategy. However, especially during this pandemic time, there is opportunity in short-term investment as well. If you ask me 3 years ago, right, actually flipping was already outdated. Why? Because not many opportunity. Before that, yes, before that, maybe 5, 6 years ago, a lot of people buy auction property also. And that time got no RPGT, right? So now, short-term investment is still very hot now, especially pandemic time. Auction market is flooded with a lot of properties. Okay, so in terms of short-term investment, people buy property, especially landed property, they renovate it and resell it at a higher price. Normally, we will advise our clients to buy property that is 30%, 25 to 30% below market price, only worth to renovate and resell it. And in fact, currently, we are actually advising an owner investor to look into one of the auction property also. Why? Because property market is going for, this market value is going for 370 to 400,000. Okay, and the auction price is 297. So we are waiting for the next round, okay? Because auction property, they always go down 10%, 10%. So once another 10% down, is the best time to buy auction property for this one, for this my client. So once renovate, spend 30 to 40,000 renovation, and it can sell at a much premium price and easily can make 30 to 40,000 just by doing so, short-term investment strategy. Okay, now I would like to share with you some of the calculation here, the return investment. So what is return of investment? Meaning, what is the gain that you have over the cost of your investment? So I just to share with you, property price purchase is 300K. Okay, the cost of purchase is 10,000. Okay, and renovation cost is 50,000. 10,000 is because the legal fees are okay, the commissions and whatnot. Okay, and renovation cost because you need to refurbish, so 50,000. Sell it at 500,000. So you can make a profit of 140,000. So how to calculate the ROI? Basically, your return, your profit gain for this short-term flipping strategy is that you make 140,000 divided by 300,000, okay, times 100%. So basically you get a return of 46.7%. Okay, this is very possible. Okay, this is very possible. Okay, now what about cash on cash return? Basically, what is cash on cash return? How much cash actually you come out and how much gain you actually make out of this investment. So just now I said property price purchase is 300,000, and to purchase this in terms of cash, right? Purchaser can come up with 10% deposit, which is 30,000, and the purchasing fee, the legal cost and whatnot, 10,000. Renovation 50,000. So initial cash he has to come out is 90,000. Okay, well, we're getting 90% loan, of course, and sell it at 500,000, and the profit is 140. So what is the cash on cash return here? Basically, to make 140,000, I come up with 90,000, and 90,000 make 140,000. Isn't it very, very good? In my opinion, yes. And in fact, we are doing a flipping. So means basically, we are looking at 6 months to a year time. So such a short period of time, you make 155.6 6%, sorry. So what other investment instrument has this kind of opportunity? I don't know lah, unless go to Genting to gamble maybe, okay, but the legal way, the smarter way, okay, is to invest, okay, but frankly speaking, there's not much of this kind of opportunity, but whenever this kind of opportunity appears, right, we will share with our investors, okay, because investment strategy is very different from each other. Some investors, they are okay with this. Some investors, they are looking for long term. So whenever this kind of golden opportunity comes in, we will recommend to our clients. Okay, so imagine this lah. Today you have 90,000, and in 1 month, in a year time, you make 140,000. Your cash to cash return is 155.6%. It's a fantastic return, right? So now I've shared some strategy to you. So do you think that buying the right property can build wealth? I would like to ask these questions to the floor. Maybe if you think buying the right property can build wealth, can you press a 1? If you cannot, do you think, hey, maybe not lah, buy property cannot build wealth, you press a number 2. No right or wrong, okay? But do you think buying the right property can build wealth? Let's see some feedback from the ground. Yes, thanks Jamie, thanks Eddie. In fact, it is true. Buying right property can build wealth. Why I highlight the keyword right property is that not all property is investment grade, okay? And I would like to share with you later how to identify it, okay? So that would be the highlight for today's topic. I hope that you learned something also, right? So buying property not necessarily build wealth, because we have seen a lot of clients actually buying property and lose money because they will buy the wrong property. But buying the right property, right, can actually build wealth. In fact, I'm buying property to build wealth for my next generation and for my retirement. And the exciting part is that buying property, right, my initial cash outlay is so low, okay? I only spent a couple of thousands, all right? And over time, I do not actually have to pay the monthly installment because why? I rented out people through investment. and I generate positive cash flow, at the end of the day, during my retirement, I can just sell it out and make a capital gain, make money over it. So that's the fun part about property investment for me. Okay. I hope that whatever I shared just now, actually you can straight away apply already. Think about it. And in fact, come to us, talk to us, see how we can help you. All right. So now I'm going to share with you how to identify the right property. Okay. A lot of my friends, right, they come to me, hey, Terence, you got Kang Tao or not? You got any good buy? Or they will ask me, hey, this property can buy or not? To be frank, I can't tell you straight, oh, this one can buy, this one cannot buy. Because what is the measurement? What is there to evaluate this is a good buy or not a good buy? All right. Hence why our team actually think about it and we develop a rating system. But this rating system is through this platform called Profere Preferred Partner. Let me introduce this Profere Preferred Partner. Basically, what this platform we want to do is to focus on real estate investment consultancy. Because like I said, every clients, right, that comes to us, right, their investment strategy is different. Why? Because their capacity, their appetite is different, their level is different. So the investment strategy should be different also, correct? Now, let me share with you what is the problem before this is that what we notice is that buyers or investors, right, when they want to buy property, they have to do a lot of due diligence. They have to do a lot of studies, identify, hey, actually this is good or not good. Even after a lot of studies, right, after they buy the property, still doesn't make money one. Okay, why? Because in normal traditional market, right, they are not being consulted. There's no access on their risk capacity. They are not access on their appetite, their interest. There's no consultation in the market. Normally, when you go to look for property, you go to iProperty, Property Guru, you click on it, and then you inquire the agents, right? The agents will only share with you the products that they have or listings that they have without reliable data, without a reliable sources, okay, to back them up. Why this property is good? Okay, this is the problem in the market. And to a certain level of clients we have, business also actually come to us, right? They are saying that they want specific property, commercial lot, because they want to expand their business. And most of the time, the agents could not get it done because they couldn't get to the owner. Hence why today I want to share with you guys is the solution that we actually come up with. Okay, first thing first is that we come up with the flow of consultation services that we have a one-to-one session with our clients and understand what actually they are looking at. And at this stage of life, what are the best strategies for them to acquire property? And what interesting here is that all the listings that we found actually backed by data, backed by the insights. Later on, I will share with you the resources that where we get all these resources and through our own developed rating system. Okay, and last but not least, we are able to access 90% of real estate in Klang Valley. Why? Because we are in the market for so long and we have the strong network to get to the rightful owner. Just to share with you, last year we have one client from in West Malaysia. They come to us to expand their business. They are doing a business, something like Mr. DIY. So they come to East Malaysia, they come to us to acquire property for the expansion. So when they come over, they actually pointed out a few units that they think is more suitable. And through that, we are able to get to the right owner and hammer a deal. So what I'm trying to say is that the resources and network that we have able us to help our clients to get the property they wanted to. Okay, now let me introduce the service that we have is Profere rating system. This is something that we developed. Okay, and I hope that at the end, after my sharing of this rating system, you see the value. All right, Profere acquisition and Profere portfolio management. Okay, what is Profere rating system? Basically, it's a rating system that evaluate a property whether it's an investment grade or not. Because like I said, back then when I buy property, right, I want to buy it cheap. I want to buy property that can give me good rental yield. And that's about it. I don't really look into other things because I do not know about it back then. So hence why we create the rating system, because as we all know, nowadays, a lot of technology, whether it's Grab, Foodpanda, all this, right? There is a rating one of the rider, right? So basically what we are trying to do here, well, our system that we develop also have this rating system, whether this is a good investment property or not. So based on 7 aspects, one is below market value, definitely, all right? Second is return of investment, occupancy rate, upkeep of property, maintenance and sinking fund, potential capital gain and infrastructure, right? So these are the 7 aspects that we're looking at. Later, I'll go through in detail. Profit acquisition is that we're able to help our clients to get to the rightful owner. That's very, very important, because without going through the right owners, right, it's very difficult to get the best deal. Yes, there's a lot of property in the market, but we able to get to the owner, hence why we able to talk to them, negotiate the best deal for our clients. Number 3 is Profere portfolio management. After the acquisition, right, and do room rental is very headache one. And in fact, a lot of clients actually come to us just for the property management. So why? Because managing tenant is not something easy. So this is a platform whereby all the service, right, that go through here, we will manage for our client hassle-free. They don't have to headache about managing the tenants, collecting of rental, okay, maintenance of the property. These are all handled by our team. And as an owner, you just have to sit back and relax, right? And all these are managed by a system, okay, a ERP system that we are using, and also reporting to our owners. Okay, the key highlights for today's topic, Profere rating system. So basically, I mentioned 7 aspects. First thing we look into is below market value. So basically, all the aspects, right, we were rated at 5 star, depends on the value itself. So how to calculate below market value? Basically, is that how many percent is the property price compared to the market value right now. So the formula is that market price minus of the purchase price divided by the market price. So if says that today this property is 25% and above below the market price, then this is a fantastic. However, like I said, we also have to look into other aspects, correct? So if says that this is in between 15 to 25%, actually not bad, not bad. 25% and above is really the hidden gem, all right? 15 to 25 actually very good already. Okay, we also look into other aspect. That will 15 to 25% will be rated at 4 star. Subsequent every 5% decrease will lose 1 star. Okay, meaning if you are buying at market price, not attractive at all lah. So that will be rated at 1 star. Okay, now go to second aspect. Okay, I try to make it short and sweet. So hope that you guys can bear with us. All right, return of investment. What kind of return we can expect when we buy this property? Because ultimately, if I don't put money in real estate, I can put money in other area, right? In gold lah, in crypto lah, in public mutuals lah, other investments through in the market. So when it comes to return of investment, what kind of return we are getting? Okay, when we buy this property. So how we calculate this for long-term strategy is that we use annualized rental. Okay, if says that 1 month rental is 2,000, annualized means 12 times 12, so it's 24,000. Okay, 24,000. We only take 80%. Why? Why take 80%? Because we have to take into consideration when we own this property, we have to pay quick rent, we have to pay assessment, we have to pay maintenance fee as well if this is a condominium, correct? And divided over the purchase price. So that would able to give you a net ROI, not a gross ROI. We use net ROI to calculate. Okay, it says that after deducting the miscellaneous 20%, right, you still can get more than 6%. It's fantastic. Okay, it's fantastic. Hence why more than 6%, we have 5 star. 5 to 5.9% 4 star, and subsequently reduce 1% will reduce 1 star. Okay, right. If you have any questions, right, or maybe I'm going too fast, you can let me know. I'll try to slow down a little bit. Okay. If you have any question, you also can leave it in the chat box. Now, let's look at third aspect is the occupancy. How many percent occupancy is in this building or in this area is very important, especially today if you are buying a sub-sale from the secondary market. You want to know if it says that this building, right, the occupancy is very low, okay, it will take longer time to get a tenant. So normally how we identify the occupancy through two things, okay. One is that we direct talk to the people that is staying there, the JMB, the management office. What is the occupancy? What is the occupancy there? Management have the information because they have to register the tenant or register the owner, okay. And then another way of getting know is that we actually go to the buildings or the surrounding area to identify ourselves. Hence why if since that this condominium or areas have more than 90%, rest assured that your unit can be rented out faster compared to the lower occupancy one. A difference between new project and sub-sale is that new project tend to have lower occupancy because it's new. It will take a longer time to get their property occupied. All right, whereas sub-sales, we already know whether this property has a good occupancy or not so good occupancy. So if it says that this occupancy is more than 90%, 90% is already occupied, right? You will rate it at 5-star. If it says that in between 70 to 90%, it will be rated at 4-star. And subsequent every 20% decrease, right, will reduce 1-star. Okay, now let's move to upkeep of property. Why upkeep of property is important? Because that is the cost that you have to come up when you buy this property. A lot of people overlook this. And in fact, when I first buy property also, I actually overlook this. How much actually I need to spend to renovate, to make it rented out in a high rental return. A lot of people actually neglected this. So when we look into this property, we identified how much you need to spend on this renovation or refurbishment to make it nice, make it occupied. Just now, Alps actually shared one of the listings that we advise our clients to renovate less than 10K, okay, and do it nicely, rented out at a very good return. So now, when it says that this property, you only come out with less than 2% of the property price, right? We will rate it at 5-star. Okay, meaning for example, this property at 500,000, you only spend less than 10,000 to furbish it nicely, to rent it out at a higher rental yield. Then this will be rated at 2-star. If it says that you have to spend a little bit more, in between 2.1 to 3%, this will be rated at 4-star. And subsequent, the more money you have to come out, of course, the lesser star it will be. Okay, especially when it comes to landed property, you need to come up with more cost, right? Just like I mentioned. So this is the situation. Refer back to just now the case that Alps shared. The property price was purchased at 400,000, and the refurbishment is, if I remember correct, is only 8,000. So it's less than, it's about 2%. 2%. So for that particular property, it will rate at 5-star on upkeep of property. Okay, right. So that's the how we rate it. Okay. Now let's move to the maintenance fee. This is the cost that monthly you have to pay to the bank. Okay, it says that it's less than 25 cents per square feet. It will rate it at 5-star. If it is more than that, it will rate it at 4-star, 3-star, 2-star. Every increase of 5 cents will lose 1-star. Why we think it's important is because this will affect your monthly cash flow. Every month you have to come out one. So in general market, right, currently a low maintenance fee, the benchmark is about 20 cents to 25 cents. That is very, very good. In fact, nowadays, a lot of new condominiums, right, is about 30, 35 cents and above. So if it says that you own a bigger property, a bigger in size, actually the monthly maintenance quite sakit one. All right. Now, let's move to number 6. Okay, this is the 6th aspect, which in my opinion is very important. And a lot of investors actually neglected this part. Is that, hey, I bought property, yes, below market price, yes, monthly installment, I'm able to cover, but 20 years later, 30 years later, hey, the property price doesn't grow, no appreciation, still a good buy or not? So hence why I want to highlight in this aspect also is what is the potential gain in this area for this property. First thing first, like I mentioned, landed property, one of the attributes here, landed property has higher potential capital gain compared to condominiums apartment. All right. Why? Scarcity land, just I mentioned. Number two, developing township is also why property price actually jump up significantly, because township that is less matured now and it developed to something much matured, the property price should up one. One good example is in Setia Alam back then. Okay, back then Setia Alam was quite outskirt. No people wants to stay in Setia Alam. Okay, and then now look at Setia Alam is growing. It's getting more and more mature. Property price should up. Same thing to Kota Kemuning. Kota Kemuning is in terms of potential capital gain, right? I think it's there. Why? Is because there's 4 big players, developers there. IJM is there, EcoWorld is there, Gamuda is there, Tropicana is there to develop this township, Kota Kemuning township. So for now, yes, maybe you don't see much appreciation, but this is a long-term thing lah. Hence why potential is definitely there. Number 3, upcoming infrastructure. Upcoming infrastructure means infrastructure that is not built, okay, not completed yet. For example, Dash Highway. For example, Setia Wangsa Pantai Highway, Duke 3, okay, LRT station, MRT station that is currently building. Actually, those property that is nearby to this upcoming infrastructure, right? Actually, the property price will boost up. When it's completed, more people are using it, the infrastructure, the better, the higher the value of your property. It's more sustainable. Number 4, potential capital gain also affected by the population and job opportunity in the area. Imagine that the property price compare in Kota Kemuning and compared to Rawang, which one has more population, which one has more job opportunity? Just a comparison. I would say Kota Kemuning. Why? Because there's a lot of industrial areas and also at the same time residential, commercial as well. Hence why in terms of this, I would say Kota Kemuning hands down. All right. So this is one thing that we look into, population and job opportunity. Number 5 is award-winning and trophy property. For example, what is award-winning property? Meaning those project or township that has won award. Okay, this is something that is unique. It's not everyone can win award. Okay, and some properties is unique. It's trophy property. Why? Because it's very rare. So for example, Tropicana Gardens in Kota Damansara, that is connected to a MRT station, sorry, and is connected one of the biggest mall in Malaysia. So you can see that this property here are more unique compared to the rest. So we will rate it as one of the consideration. And last but not least, good record of past capital gain. Okay. For information, a lot of properties, right, compared to 5 years ago, actually the past capital gain go down, especially for condominiums apartment. However, for landed property, actually we have seen a good record, quite stable one for landed property. And certain condominium, although this time the property price still maintain or go up for the last 5 years. So it says that there's a good record of past capital gain. We would say that actually still got a lot of potential because it's quite stable, especially during this time. So we will rated that also. So for example, in this case, right, it says that there's only one attribute here that is hit, we will only rate at 1 star. If 2 attributes here out of 6 is hit, then we rated 2 star. 3, then 3 star, 4, 4 star, 5, 5 star. More than 5 will be also rated at 5 star. Okay, this is something that we also very focused into. All right, last but not least, the infrastructure, the booster we call it. Okay, why is it important? Because people like to stay to convenience. People like to stay near to amenities, and hence why occupancy rate is higher. It's easier to get tenant, right? When it comes to investment, property investment, right? So when it comes to rating this property, right, we base on 3 kilometer radius, not too far, because if it is too far, it doesn't make sense at all when it comes to the rating. So we look into 5 things: MRT station, LRT, higher education, university, medical center, hospital, business hotspot, all right, and highway. Okay, not all properties were able to hit this, but there are certain areas, especially closer to KL1, certain actually hit all these 5. I just want to give an example, Bangsa South. Anyone do not know where is Bangsa South? I'm sure a lot of people here know where is Bangsa South already, right? It's along the Federal Highway, okay, behind Bangsa. So as Bangsa South, you know that it's connected to LRT station, Kerinci LRT, University LRT. There's 2 LRT stations within 3 kilometers. In fact, 1 kilometers or less. Is that close. And then higher education is University of Malaya. Third is University, third medical center is Hospital, all right? And it's at UOA Bangsa South, okay? The vertical horizon is there. These are the famous office building that Alibaba is there. A lot of IT company is there because it's a MSC status commercial lot, okay? And it's next to Federal Highway, MPE Highway, upcoming Duke 3 Highway. So fantastic location. So for this aspect, we rated at 5 star. But I'm not saying that all properties in Bangsa South can buy, you know. That's why buying property, you have to look into a few things. And based on our system, we rate it at this 7 aspect. So what happened will be, once this all these 7 aspect is rated, we will come up with the average score. 7 aspect, right? 5 star, right? We will take the average of each and total up. See what's the scoring. Okay. Kampung Kerinci now, Jamie, yes. Kampung, but some properties still falls under Bangsa South, but certain falls under Kampung Kerinci lah. Too bad lah. The name actually, if not mistaken, got a little bit of affection, right? Okay, now we look at this rating system that we actually proposed to one of our clients is in Ampang. So as you can see, how do we do this proposal? Basically, why D Pines Ampang is because this client, right, they want to buy property to invest first and stay later. And in fact, her family actually staying nearby. So when we rate this property, we recommended this property is because that it actually score quite well. As you can see, this is a service residence. It's a leasehold property. It's 1,394 square feet. Property price is only 430,000, but market price is 640. This one we actually check with the valuer also. It's verified. And property, the layout is 4-room, 3-bathroom itself. Normally condominium is 3 rooms, right? But because of the size, this condominium has 4 rooms, okay, and 3-bathroom. And what we suggest is to rent it out by room, 6 room, because it's big enough to add 2 more rooms. And with the rental rate of 500, can rent out 3,000, okay? This is in KL, actually 500 per room is considered cheap already, you know? And the maintenance is less than 25 cents. And what good about this area is that it close to a lot of amenities. The university, we only look at university, we don't look at SMK, or because students that going to rent are those that studying in higher education, and close to hospital, close to some shopping mall. And you can notice that it's also accessible to MRR2 highway and Akle highway. And what good thing about this is that walking distance to LRT station and upcoming MRT interchange. Okay, by looking at the rating, we can see that it's below market value, about 20%, 20 over percent, more than 25%. Hence why we can get 5 star on this aspect. Okay, ROI 3,000 times times 12 is 36,000. We take 80%, not 100%. We take 80% over the property price, 430,000. So can more than 6%. So rated at 5 star. Occupancy rate not too bad, 70 to 90%. Okay, rated at 4 star. Upkeep slightly more. Why have to spend more? Because we have to partition additional room. Okay, because have to add partition additional room, so the cost of the upkeep slightly more, but it's good because it generates higher return. Maintenance less than 25 cents, hence why rated at 5-star. Infrastructure, fantastic, because it hits all the infrastructure required within 3 kilometers, 5-star. Potential gain, okay, not bad, 3-star, not 5-star, but 3-star, not too bad. Okay. So out of 10, the scoring is 8.3. Actually, in our opinion, anything more than 7, right, is something worth consider. And 8.3 actually is one of the very good buy. Okay. We have also property listings that more than more than 9 point scoring. Okay. Anything less than 7, I would say, unless there is certain unique point why you want to purchase. Otherwise, we will recommend something more property more than 7-star. Hence why with this rating system, right, we are more confident to tell our purchaser, hey, actually this is a good buy, because there is something that able to guide our clients to make a wise decision. Because back then, like I said, a lot of my friends, clients ask me, hey, this one can buy or not. Without this, I cannot tell, because there's no benchmark, there's no measurement to measure it. So with this system, we are able to help our clients do a lot of lessen their due diligence, less work for them, and make a wiser decision when it comes to property investment. Less mistake lah, right? Now, I want to share with you what is the difference between us and other agents in the market. Basically, we are focused on investor. We don't push our property. Hence why we have a consultation service, a consultation session, whereby we talk to our clients, see what they're actually looking at, and tailor-made to their requirement, because every client's appetite and financial profile is different one. So investment strategy should be different. Okay, today I wear M size, takkan people push me XL, I still buy XL, meh? Correct or not? So just an example lah. So everyone is different. So we tailor-made to that. And with this rating system, right, we are able to help the clients to find a hidden gem in the market, and through our access to the rightful owner as well. Last but not least, after acquisition, our investor do not have to have the headache of managing their property, because managing property or even comes to room rental is very headache one. So we want to ensure that the whole process from consultation to purchasing to managing is hassle-free for our clients. Okay, this is the value and service that we can provide to our client. All right, let me introduce some of our strategic partner. Okay, CTOS Data, I'm sure that some of you already know that what is CTOS. Basically, this is a credit reporting agency. Besides CCRIS from Bank Negara, we also use CTOS to help our clients to do a credit check on the other party. Okay, and we also work with CC Advisory. They are approved financial advisor by Bank Negara. So any financial advice, right, we will recommend more financial, not property related, but more financial. We also recommend CC Advisory. Okay, and whatever data or whatever insights we have, right, we get it from Jabatan Penilaian and Perkhidmatan Hartanah, JPPH. So whatever data that we share with you is not from ourselves, is also from the government bodies. Okay, just now I also mentioned about auction property. Okay, auction property, we have partner here, bidnow.my. Basically, they are also auction platform. So basically, they also give us advice on auction property, which is actually a good buy, and then we propose to them and ensure that step-by-step procedure we will guide you through as well. Okay. Last but not least, yeah, two more partners that we are working with is Firdaus Associate, whereby this is the valuer. When we get value, right, we want to get a certified valuer that can make sure that value that we purchase, right, the property price that we purchase, able to get it. Okay. And last but not least, another property insight and data analytic partner we have is Property Advisor. Okay. Now, I see we have friends here that is interested in registering the consultation part. Don't worry, we will go through that very shortly. So I'm going to share with you real estate investment roadmap here. So first step is to get to know each other and understand our platform. So basically, I already shared with you some investment strategy, the macroeconomy perspective, and what we can solve the market's problems. Okay, now you know us. So after this, right, we have a breakout room whereby our consultants, right, will actually have a chit chat session, understand you, and no obligation, just to get to understand each other and see if any of our service can help you. Okay, step 2, which is the consultation lah. All right, we will have, if says that you are ready, you think that, hey, this is the right time to buy now, and you want to look for the right property, basically we will have a consultation, a series of consultation with you. Okay, after that, setting out the right property, we will arrange a viewing appointment and seal the deal with the best price. And last but not least, the step 4, which is the harvest part, whereby post acquisition, we have a dedicated team to help you to manage your property. Okay, now it comes to the last page, whereby what happened now will be the breakout room. Okay, so we have two consultants here with me. One is Alps Tan, actually been with us for since early of this year, but he has been in the industry for 8 years already. Okay, and he specialized a lot in unit management. And another consultant will be Jasper. Hi, Jasper, maybe you can say hi. So Jasper with us for past 2 years, been transacting a lot lah. All right, through rental or through sales. So Alps and Jasper will be at the end of the breakout room with me as well. So after this, there will be a breakout room. So I hope you guys can click accept. Okay, do click accept to join in the breakout room. I will see you on the other side. Okay, Abby, maybe you can help to arrange the breakout room.